So in today's video, I'm gonna give you probably one of the most important information that you wanna have for tax purposes before the year ends. So these are the 5 things you wanna do in the next 60 days if you wanna reduce your tax bill for sure. My name is Victor Delorme, I'm a CPA, and welcome back. So your finances are very important. Your business finances and your personal finances are highly important. It's probably one of the most important things ever. Like if you really think about it, number 1 is health. And number 2 is the economy, right? Like your house economy, your personal economy, and your business economy, right? So for tax purposes, in your taxes, your business taxes, or personal taxes, the government actually gives you many tools that if you use in a smart and an efficient way, you can reduce your taxes and bring tax savings and more money to your pocket. So in the next few minutes, I'm gonna give you the 5 things you wanna do in the next 6 days before December 31st if you want to reduce your taxes for 2022. Number 1, you want to put money in a 401k, right? You want to put money in a retirement account. If you work for a company, you can put up to $20,500, which is the maximum amount for 2022. Now, the great advantage of putting money in a 401k plan is that you put money into the plan and you reduce your tax base by $20,500, right? So, like if you really think about it, you put money into the plan and then your account is gonna grow tax-free until the age of retirement, typically 59 and a half years. One advantage of putting money in a 401k is that in case you need the money, things happen, right? Things do happen. So if you need to borrow money and you don't have enough money in your savings account, you can borrow money against your 401k plan. And as long as you pay it within 60 days, there's no penalties or interest charged into your retirement plan. But absolutely the greatest advantage of putting money in a 401k, number 1 is the tax saving, right? You're gonna defer your taxes into the future and you're increasing your personal wealth. Number 2, you wanna put money in a Roth IRA. This year, the maximum amount is $6,000. And if you qualify, you can put an extra $1,000 into a Roth IRA as a catch-up contribution. The greatest advantage of putting money in a Roth IRA is that when you put the money into the plan, you don't save taxes, right? So in the short term, you don't save money on taxes. However, your account is gonna grow tax-free forever. And you're gonna have gains in your account. And once you start pulling money out of your Roth IRA account, you don't pay taxes on it, right? Why? Because you didn't take a tax deduction when you're putting the money into the account. Right? You're not taking a tax deduction now. So in the future, you are not gonna take a tax deduction either, right? And your account is gonna grow tax-free. And typically, you don't have to start pulling money out until you reach the age of retirement, which is 59 and a half. So I'm gonna give you an example if you're putting money in a Roth IRA. Let's say that every year you're contributing the maximum amount. And let's say that, in the next 15, 20 years, you contribute, let's say $200,000, right? But that's the cash contributions that you've made into the account, right? Now, let's say, for example, that your account increases in value from $200,000 up to $400,000. That growth is gonna be tax-free. Exactly. So you're gonna make an extra $200,000 tax-free. Actually, I believe that's the best advantage that the Roth IRA has, that your money is gonna grow tax-free. Number 3, make a charity contribution. So I'm gonna give you a system that you can utilize if you wanna make a charitable contribution before the year ends. So walk around your apartment or your house and make a list of the items that you use and the items that you do not use, right? And then on the items that you use, you're gonna keep, right? And then the items that you don't use, you're gonna think twice about it, right? You're gonna say, okay, why am I not using these items, right? And then ask yourself, why would I use these items, right? And then you're gonna have 2 columns, okay? So you're gonna take the ones that you said, okay, I am never gonna use these items like furniture, household goods, right? Clothes, shoes, right? Things that are in good condition, you wanna go ahead and take it to Goodwill, right? You will never use those, right? And by making that charitable contribution, you are, number 1, helping someone, helping an organization, and at the same time, you're decluttering your house, decluttering your apartment. You're gonna have less things around you. So you're gonna have less distractions, okay? So 2 wins there. You're gonna help an organization, you're gonna take a charitable contribution deduction there, and then you're gonna have less things to worry about. You're gonna have less distractions, and then you can focus more on your health and then in your personal finances. Number 4, you're gonna open a HSA account, right? An HSA account allows you to put money into a plan, and you don't pay taxes when you put money into that plan, and then the money that you accumulate in the HSA account, you can use it for medical expenses. This typically helps a lot once your deductible in your health plan is too high, right? So if your deductible is too high, you can use your HSA account money to pay for medicine and for doctor visits, as well as medical procedures, right? So think about it. You have a health plan, right? And you have a high deductible, but also you have an HSA account, which you're putting money into it, and you're saving taxes on the money that you put into this account. The money that you have in that account, you can use it for medical purposes, okay? So it's like a win-win. You're saving money for your own health, and at the same time, you are reducing your taxes. Number 5, if you own a business, here's what you want to do. You want to make sure that you take an inventory of all the equipment and all the furniture that you have in your place of work, in your place of business, okay? Now, if you need to expand your business, if you need equipment, if you need new computers, if you need new furniture, and all of these items are going to enhance your business, the visibility of your business, the productivity of your business, then it's probably the best time for you to invest with equipment and furniture and things that are going to increase the value of the services that you're going to provide or the products that you're going to sell, right? Think about it. You buy equipment, you put into place, and you take what's called depreciation, right? And you can take up to 100% of the cost of the value of the equipment or furniture before the year ends. Okay, so you're gonna have a huge tax write-off if you buy equipment and you put it into place in your business before the year ends. Make sure you do that. As you see, there's many advantages of planning your taxes before the year ends. You can save a lot of money by thinking and strategizing in the next 60 days. Make a list of all these examples that I've given to you and see which one applies to you. And if it applies to you, talk to your CPA, talk to your accountant, talk to your tax professional, and take action. My name is Victor Delerme, I'm a CPA, and I'll see you soon.